Hello and welcome to another update video about MATIC. MATIC is in a position where basically a third wave to the upside could start at any time. So far, the reversal in the yellow support zone was successful, but we haven't really started to move up very aggressively yet. However, quite substantial gains from last week. We can take a look at that in a minute. So good performer at the moment. Someone posted yesterday that MATIC is disappointing. I mean, just check what MATIC has done, right? I mean, I don't know which chart you're looking at, but between September and basically December, MATIC moved up 123%. And even from the low point in our support zone for the wave 2, the market already moved up like 25%, yeah, in quite a short period, only a few weeks. That's quite substantial. So it's basically just moving in line with the market at the moment. And it's a good foundation for potentially a more direct move to the upside. Obviously, if it needs to, it could still use the yellow support zone, again, all right, which might provide another opportunity to add a little bit lower for anybody who would like to do so. But ideally, ideally the low is in, right? Ideally the low is in. The yellow box is still relevant in my opinion. It's still an area that the market could use in case the wave 2 is resetting. Nothing I'm primarily watching for at the moment, but there's still more work to do to really confirm that a low is in. At the moment, we've got all the confirmations we need and that we can get at this stage. But ultimately, the market needs to move above that B wave high at 96 cents and then the wave 1 high at around about $1.10 to confirm that further, that this third wave is unfolding to minimally $2.12 would be the minimum target. Better would be $2.42. Higher, or let's say further extensions, are always possible. Let's go to the 1 hour chart. Here, the price has already rallied in a 5-wave structure from the recent low, so from that January low. Yeah. So that was the first indication that we get the next bullish setup. We did have the next bullish setup, which was here, this zone. The market came down in 3 waves. The C wave ended below the A wave low. That's typically what we would like to see. What I can do now is take out these trend lines. We don't need them anymore. And also here we had a nice reversal. So, I mean, that's really good because it means that the market is respecting the Elliott wave count and the parameters. More importantly, the parameters. Yeah, and this is now a bit messy. Okay, where do we have support now? At the moment, due to the messy subwave structure, I mean, we're now at a very, very small wave degree. So things are very fragile here. I prefer to leave the support zone where it is at the moment. But I can only highlight to you that we might not even get there. Okay, so that is at the moment my approach. We might not get there. And the reason is, what exactly this is a little bit unclear. It could be that this is another 5-wave move in a leading diagonal in wave 1. Another 1-2 setup basically, that wave 1 topped here. It's also possible to say that wave 1 topped here, and therefore I rather leave it a little bit more space and mention it in the video that we might not even reach the support area. However, I'm leaning to this idea that we have completed possibly another 5-wave move and then an A wave down, possibly now a B wave rally, and a C wave down could be unfolding now. That takes, however, a sustained break below 83.8 cents to confirm that this C wave is unfolding. And it, as I said, it might not even reach the support zone. But bottom line is, as long as we're holding above 78 cents, I maintain this idea here. And then a third wave should then take us higher eventually, right, on this time frame and wave degree. But I can really only give you a target for this smaller degree third wave once this wave 2 of the smaller degree is complete. But ultimately what you see here in white is the first subwave structure that should allow the market to reach those targets up there around $3 plus. Basically, I think the market is prepared. All that needs to happen is now for the bulls to really turn up. They need to turn up, and if we get a sustained break, above today's high, or what was that, yesterday's high, it becomes more and more likely that we're already in this third wave more directly and that we will not see any more deep pullbacks, emphasizing basically the, let's say, the need, or from a technical point of view, the best practice to hold a good core position, because if we are in bullish markets, more generally speaking, not just regarding MATIC, but if we're in a bullish market and you're not holding a healthy core position through the ups and downs of the market, it's very likely that you're going to feel quite a bit of FOMO. Yeah. So that is just something that is best practice, and you can always trade around that core position with smaller positions and then take any profits, put them back into your core. At least it avoids FOMO. It will prevent FOMO. So at least to a large degree. So I think I remain of the view that this is at the moment at least a bullish structure, or it has bullish potential. All that needs to happen now is, of course, for the bulls to turn up. We have very well-defined parameters and also upside targets. So let's see if MATIC will perform in the next few days and weeks. I mean, there's no need that it happens tomorrow. There's no guarantee it happens tomorrow or even today. It's already performed really well end of last year, and also, since the January low, good performance. And I keep you updated. Hope you liked the update. If you did, please hit the like button, leave a comment and subscribe. And if you really like the content, then please check out the channel membership. Also, make sure that you follow us on Instagram and Twitter for additional content. Thanks a lot for watching. Bye-bye.